4, Forex market participants. Who are these forex market participants? Who are we up against when you trade forex? Okay, now it's important to know that everybody in the world are part of the markets directly or indirectly. Okay, directly in the sense that you are actively trading and you know what you're doing. Indirectly in the sense that the result of the activities, and the policies made by the government and activities of investors and traders, directly impacts you. So you become therefore an indirect participant. Now, the activities of the government and central banks affect the notes we use in our day-to-day buy and sell in both our domestic and international transactions. So who are these market participants? First on the list is government. Second on the list are central banks. Third, we have here commercial traders, which include commercial banks, investment banks, hedge funds, and other financial institutions. Now we have retail traders, and of course, we have brokers. Brokers are the middlemen here. They're the ones who initiate the buy and sell orders. Okay, now at least when you see government, central banks, and commercial banks, and retail traders, which is you and I, you know that market participants are not robots, are not things we are unfamiliar with. They are not abstract people. They are human beings. They are fellow people, okay, who are participating in this market, who make policies or who invest directly, to move price up or down. So you need to understand these people. You need to pay attention to them. You need to understand their mode of operation, what they are looking for in the market, and why they are in the market. Now here you can see the top participating banks. Deutsche Bank having the highest quota, the UBS having the highest quota, second to the largest quota. You have Barclays, Citibank, you have RBS, you have Morgan Chase, you have HSBC. Now what I want you to do, is to privately check out these companies. What is their market capitalization? How much do they have? And what are their interests in the market? And how long they've been operating? Having a good understanding of these companies and how they operate will also give you a good understanding of how most commercial banks, and commercial traders operate. So let's itemize the individual functions of this market participant. First on the list here is government. Government participates in the forex market through their trade ties. Now, every government have trade allies, okay? Because every country have who they buy or sell to, okay? Because no country is an island, right? There is trade going on from one country to another. That's how countries generate most of their revenue, or that's how they survive. Okay, because some countries may not have this, but they have this, so they use what they have to get what they want or what they need. Okay, so the government of these countries now make policies to facilitate trade to the benefit of its citizens. Okay, so if the government does well, they profit. They make their GDP grows. They grow in their employment. A whole lot of stuff. They make improvements. But if the government does badly, you largely see unemployment. You largely see declining GDP. And what have you. And of course, depression. So while trading forex, one ought to pay attention to respective governments of the pairs you are interested in, as well as other important governments of the world. Tweets or interviews from top government officials also determine which direction the market would go. So as a beginner trader, you should always pay attention to top government officials. The other day we have government appointee for Treasury Secretary Janet Yellen, coming hard on Bitcoin and other cryptocurrencies. And what do we have in the market? Cryptocurrencies went down. I mean, they went so low. They declined, they shrank. So that comment, imagine you as a beginner trader, you just heard that say make a speech, you went ahead and sell, you would have made a lot of money. You would have made a lot of money at least, or you would have saved yourself from some losses if you had your investments in the crypto space. Okay, so the comments they make now, it may not necessarily be the government for that particular asset. Important government officials already have shown you the governments that contribute the highest equity in the market. So you need to pay attention to those governments: the United States, China, Japan, Germany, the UK, and what have you. Another example we have here: in January 2020, the United States sanctioned Iran, an oil-producing country, on violation of a nuclear deal. A lot of countries stopped buying crude oil from Iran, which resulted to increase in demand of crude from other oil producing states. And of course, this made the price of crude oil to went through the roof. Okay, now other currencies that are closely correlated to the price of oil, like the Canadian dollar, profited highly from that event. Now, if you understand this series of events, whenever such kind of sanctions or policies come up, you pay attention to what currency you're going to buy quickly to make your money. Central banks. Now, central banks participate in the forex market for their operations, international trade, payments, and handling their foreign exchange reserves. Central banks affect the forex market when they adjust interest rates to control inflation. They can also affect it by direct intervention. The increase and decrease of interest rate causes the currencies to either rise or fall, because whenever interest rate increases, investors tend to invest more, and thereby creating the demand for the currency, and because of that, the price of that currency will keep going up. So you pay attention to whenever central banks say, "Oh, we want to increase the rates," okay, you invest in that currency. In fact, any central bank of the world that announces they want to increase rates, you invest in the country, and when they announce that they want to decrease rates, you fly away, you run with all that you have, enter the next flight and escape from that currency, okay, because it's going to actually decline in value. Here you have the overview of the oldest central bank in the world, that's the Bank of England. Now, the third most important participants in the market we have here are commercial traders. Like I told you earlier, they include commercial banks, investment banks, hedge funds, and multinational companies, etc. These guys are the big boys in the markets. Citibank, Chase, Barclays, they come to market with a lot of money, billions of dollars, hundreds of billions of dollars, some even trillions. Their decision on what currency to buy or sell can make the market move considerably. They employ several experts, sophisticated models, and technologies to execute their trading activities. So trading isn't a joke to them, and it shouldn't be a joke to you either. So whenever you want to start trading, you have to make a few rundown. Go through the websites where you get these informations. Okay, what are these commercial traders up to? You have to brace yourself to understand what game they want to play, so you can play along with them. Remember, you as a rated trader, your money is too small. You can't move the market. You just have to follow these big guys. Now you can see some of the sophisticated equipment these guys have in here. The banks with biggest market share in the forex market. Now they have a lot of facilities and a lot of experts trained, who specialize in different assets. So these are those you are up against. So if you want to go into this, don't take it lightly. Don't go into it casually without proper knowledge or proper study. If not, you may incur huge losses. Now, retail traders. This includes every individual trader or small groups. Their market share is relatively very low. As a retail trader, it is advised that you do not try to force market, as you could lose your entire trading capital sooner than you realize it. Therefore, sit back and allow us to arm you with knowledge so you could come back with consistent profit. But the idea is to make money, not to lose it. Retail traders don't move the market, they follow the market. You get stinged if you try to force the market.